In the middle of all this market noise, one REIT stands tall: Mapletree Logistics Trust. With 180 properties across 9 countries, it's quietly delivering stable income. Let's break down why it continues to be a powerful income-generating asset. Before we dive in, subscribe to Wealth for You and like this video if you want financial freedom through passive income. Stay with me till the end to find out why this REIT might just be your next power move. Disclaimer: this video is for educational and informational purposes only. It is not financial advice, and nothing in this content should be considered a recommendation to buy, sell, or hold any investment. All investments carry risk, and past performance is not indicative of future results. Always do your own due diligence and speak with a licensed financial advisor before making any investment decisions. Chapter 1. What is MLT? Mapletree Logistics Trust, or MLT, is a leading logistics REIT listed on the Singapore Exchange, and it's built for the future of supply chains. As of March 2025, MLT owns a robust portfolio of 180 income-generating logistics properties across 9 key markets, including Singapore, China, Japan, South Korea, Australia, Vietnam, Malaysia, Hong Kong, SAR, and India. These aren't just warehouses. They're modern, well-located distribution hubs serving some of Asia-Pacific's fastest-growing cities. Think about the engine rooms behind e-commerce, last-mile delivery, and retail logistics. MLT owns the infrastructure that powers all that. It serves a diverse tenant base of 934 companies, with most of them handling consumer-related goods like food, fashion, electronics, and household essentials. And with a market capitalization exceeding 8 billion Singapore dollars, MLT is not just one of Singapore's largest REITs, it's also one of the most trusted names among dividend investors looking for long-term stability and income growth. Chapter 2. FY 24-25 Financial Highlights. Despite a year filled with currency swings and macro uncertainty, Mapletree Logistics Trust stood its ground, delivering another solid performance in FY 2024-25. The trust brought in a gross revenue of 727 million Singapore dollars, with net property income, that's what's left after operating costs, coming in at 625 million Singapore dollars. Occupancy across its portfolio stayed strong at 96.2%, showing that demand for quality logistics space is still healthy. In fact, in some countries like Australia, India, and Japan, properties are close to or fully occupied. But here's something many investors overlook: WALE, or weighted average lease expiry. For MLT, it's currently 2.8 years. Now, what does that mean? It tells us that, on average, the leases across MLT's entire portfolio will only expire in about 2.8 years. That's a good balance. It's not too long, so rents can be revised upwards in a rising market, and not too short, which could increase vacancy risk. It's a sweet spot for consistent rental income and flexibility. And that's exactly what you want from a dividend-paying REIT: predictable cash flows, high tenant retention, and just enough lease rollover to grow distributions over time. Chapter 3. DPU, Ex-date and payment date. Let's talk about what really matters to income investors: the dividend. For the fourth quarter of FY 2024-25, MLT declared a distribution per unit DPU of 1.955 cents. That brings the full-year DPU to 8.053 cents. A solid payout given the economic challenges and divestments during the year. Now, if you're eyeing that next dividend payout, here are the important dates. Ex-date: 30th April 2025. Record date: 2nd May 2025. Payment date: 13th of June 2025. So if you want to qualify for this distribution, make sure you buy MLT units before the ex-date. Once that date hits, New buyers no longer get the current payout. Chapter 4. Diversified Strength. MLT's portfolio is well diversified. About 70% of assets and revenue come from developed markets. No single tenant dominates. Top 10 tenants contribute just 21.7% of gross revenue, and 85% of tenants serve local consumption, reducing exposure to global export volatility. Chapter 5. Green Growth and Portfolio Rejuvenation. MLT is modernizing and going green. 14 older properties sold for 209 million Singapore dollars. That capital was reinvested into newer, better-yielding properties in Malaysia and Vietnam. 56% of its portfolio is now green certified, and they boast 71.1 megawatts peak of solar capacity, the highest among S-REITs. This is long-term thinking, not just yield chasing. Chapter 6. Why MLT is still a buy. Let's be real. REIT prices have taken a hit, and Mapletree Logistics Trust is no exception. With ongoing uncertainty from rising trade tensions between global superpowers, markets are jittery and investors are playing defense. But here's the twist. This could actually be a great time to enter. Why? Because while the headlines may rattle short-term traders, MLT's fundamentals remain rock solid. First, it offers defensive income. Logistics properties are essential infrastructure, especially for domestic supply chains, e-commerce, and food distribution. That demand doesn't disappear in a downturn. Second, the portfolio is stable and diversified. MLT doesn't rely on one country or sector. Even with weakness in China, other regions like Singapore, Japan, and Australia continue to support growth. Third, the tenants are resilient. 85% of them serve domestic demand, not exports. So even if a trade war escalates, MLT's income stream isn't overly exposed to cross-border disruptions. And lastly, they've hedged 81% of their debt and 75% of their income to manage interest rate and currency risks. That's disciplined risk management. So here's the upside. With prices down and the fundamentals intact, the yield becomes more attractive, and you get to enter at a potential discount, buying high-quality assets at lower prices. If you're a Singapore income investor, this could be your window to lock in consistent dividends and ride the long-term growth of Asia's logistics boom without paying peak prices. Final thoughts. So here's the bottom line. MLT isn't just surviving the volatility, it's thriving on resilience and positioning for the future. If you're serious about passive income, MLT could be a smart addition to your portfolio, because at the end of the day, it's not just about being rich. It's about being cash flow rich. That's what gives you freedom. Want more clear, no-fluff insights like this? Subscribe to Wealth for You, smash that like button, and drop a comment. Are you holding MLT or thinking of buying in while the yield is hot? Let's keep building your income engine, one dividend at a time.